and this podcast is for informational and educational purposes only and does not constitute financial advice. Please consult with a qualified financial professional for advice specific to your situation. The views and opinions expressed are those of the hosts and guests and do not necessarily reflect those of the podcast producers or sponsors. We make no representations or warranties regarding the accuracy or completeness of the content. Hi, my name is Bella Carrasco, and helping others feel more comfortable about investing brings a huge smile to my face. After working in the private equity, family office, and securities markets for nearly a decade, I pulled together my resources to interview experts in each area of the due diligence process and answer how do you know questions when considering your future financial safety. We go deep into questions about many phases of the investment process, with the goal of helping you go from practice to game time confidently. This is the How Do You Know podcast. Today we are learning from Matt, who has over a decade of experience in the commercial real estate advisory space, where he consults with private equity operators and sponsors to guide them through fund management and administration. So, Matt, thank you for being here today. Can you give a brief overview of your current role and responsibilities at Juniper?
Yes, thank you, Bella. Appreciate the introduction. Thank you for having me on the podcast. So, as you'd mentioned, I have been consulting and selling into the private equity commercial real estate space for a little bit over a decade. So, I graduated with a business degree from Santa Clara University in Silicon Valley and started my career in accounting ERP sales. And then I began working for Yardi Systems as a sales executive, consulting and selling into commercial real estate businesses, property managers, and investment managers. And then about 4 years ago, I made a transition to move to Juniper Square, where I've been, again, on the sales team, consulting exclusively for commercial real estate GPs in private equity.
And what drew you to this business?
So it's an interesting question. So my father has been a career CFO, and in many ways, I've always felt like I'm most relatable to the CFO persona, but I never gravitated towards a back office type roles. I always wanted to be a connector, a relationship builder. So I knew that I wanted to be in a customer facing role. So I went into accounting and accounting services sales, and it seemed like a perfect fit. Another interesting component of that is after spending about 10 years in this real estate accounting software, ERP, and services space, I realized that the real innovation opportunity, at least that I could participate in, was in the private markets. It's an interesting statistic. Commercial real estate is the world's third largest asset class behind debt and equities. The public markets have phenomenal technology, transparency, regulation, access. The private markets, on the other hand, they're essentially the inverse. They lack access, they lack liquidity, transparency, regulation, etc. So I really see tremendous opportunity for technology to innovate the private markets over the next decade. And I think, in my biased opinion, Juniper Square is really at the forefront of this effort. The company's started a decade ago, and I think at this point we're so far ahead. We've got so much momentum. It's going to be really difficult for anyone to catch up.
Yeah, I think that just because the private markets aren't regulated doesn't mean that it should deter people from investing in those types of assets. It's just making sure that whoever is regulating you is doing so appropriately. So I'm glad that you brought that up, because I think a lot of people can be confused by the word fund administrator or fund administration.
I totally agree. Um, just because it's a non-regulated industry doesn't mean or shouldn't scare investors by any means. Um, I think as long as you're doing your due diligence as an investor, you can make uh, very informed decisions um, with very good return.
Yes, absolutely. And there might be some confusion about what fund administrators do. So, can you
Definitely.
just give kind of a brief overview
Yeah.
on how they support fund managers and investors?
Yeah, there's definitely some confusion in this space. When I talk with commercial real estate GPs, who typically the confusion is with a firm who's traditionally done syndicated deals, um, and maybe they're looking to launch their first fund. A lot of those folks are not completely familiar with what fund administration entails. At a high level, the role of a fund administrator, we'll call it a third party fund administrator. So this is where you're going to be outsourcing that function. It's to act as the official books and records for the fund. And really ultimately it's to ensure that the fund is operating according to the fund's legal documents. Now, um, what some specifics of what that entails. At a high level, there's three buckets. There's accounting, reporting, and treasury, all at the fund level. Typically, fund administration does not get into the asset level reporting and accounting. That's typically handled by a third-party asset manager. Sometimes it's done in-house. But from a fund administration standpoint, we're just dealing with the fund accounting, reporting, and treasury, just as a high level. Now, from an accounting standpoint, we're going to be preparing balance sheets, income statements, PCAP statements, calculating allocations, management fees, promotes returns, etc. And then similarly, we're going to be reporting, producing reports, um, distributing financial statements, K1s, capital calls, distribution notices, and the like. And then from a treasury standpoint, we're going to be managing receipt of capital calls, dispersing distributions. So at a high level, that is what fund administration, third-party fund administration entails.
That's perfect, because I think sometimes fund administration can be last on an investor's mind, but the accounting is so important. Keeping up to date on your investments is crucial. So reporting is important, and so is the treasury. So getting all of that information, how should investors use it for their advantage?
Well, there's a few different ways that you could think about answering that question. From a, I'll answer first from a GP standpoint. Um, why would you outsource third-party fund administration? And this relates to why an investor would want to invest with a GP that outsources fund administration. One, it's about core competencies and access to specialized expertise. So when you outsource the fund administration, you're accessing a team of fund administrators or fund accountants who are familiar with the unique challenges and regulations that apply to real estate investments. Um, you know, General accounting, bookkeepers, CPAs. If they don't have the requisite fund administration experience, uh, you know, they're going to encounter some issues. They're not going to be up to speed on the latest regulations that apply to the industry. And so many of the GPs that we work with, um, they're very good at what they do, which is raising capital and finding investment opportunities and executing on those opportunities. Um, and many of these GPs do not want to try and run an accounting firm within their organization. So that's I think first and foremost. The second is segregation of duties, and this is really important. Um, it's very good to have an independent third party. In fact, I would say it's best practice. And if you look at traditional private equity and venture capital, this is standard operating procedure. Outsourced or third party fund administrator, fund administration is expected. And that's because the third party fund administrator is that independent third party who is going to ensure that the GP is adhering to the fund legal documents, calculating returns correctly, and also making sure that everything within, that's taking place at the fund level is in compliance. And so for whatever reason, in the commercial real estate private equity sector, you know, it hasn't been as commonplace traditionally for firms to outsource their fund administration function. Now, in the past 5 years, that has changed dramatically, but I still think a lot of companies are behind the trends and continue to do fund administration in-house at their detriment. From a compliance standpoint and from a capital raising standpoint. When we look at investors, LPs, I think high net worth investors, retail investors, it's kind of a mixed bag in terms of if they are, when they're underwriting investment opportunities, they're looking at whether or not a GP has a third party administrator. But the more upmarket you go into family offices and certainly institutional investors, they all require third-party fund administration, and for good reason. And that brings me to my third point, risk reduction. And this kind of ties into the segregation of duties, but I think it's worth mentioning. When a GP, and a lot of these GPs that I work with, kind of in the middle market, so I would say, under 10 billion AUM within the portfolio, there's a lot of real risk in trying to build out a fund accounting team internal. Typically, that's going to land on one or two people, and if you're running a investment management firm and you've hired one or two fund accountants, if one leaves, at the end of the quarter, the end of the year, are you going to be in compliance? Are you going to miss deadlines? What's going to happen? How long is it going to take for you to replace that person? Whereas if you outsource to a third-party fund administrator, like Juniper Square, we're going to have economies of scale, and we have redundancies in place so that doesn't.
Yeah. So for me as an investor, I would want that separation of interests. That way I kind of know the books are clean.
Yes.
And having that third party makes me feel more comfortable. But I'm sure that there's a bad fund administrator versus a good one. Do you have any clients with horror stories? I'd imagine Juniper has some that have left others because it hasn't gone so well.
Absolutely. So a large portion of our business is GPs who are currently outsourcing their fund administrator with another firm. And the issues throughout the fund administration industry are pretty uniform. Or in other words, they're very similar across the industry. So there's really three issues that I see and that we see kind of in most conversations that we have. That's reporting accuracy, reporting timeliness, and then high turnover. Um, and so when we talk about what's a bad fund administrator, those I think have to be mentioned in that conversation. If a fund administrator is calculating returns incorrectly, certainly that's unacceptable. If a fund administrator is missing deadlines, missing filings, that's certainly unacceptable. Uh, and and then to the turnover point, um, the issue there is that the quality of a fund administrator is in its people and the teams that it assembles, and ultimately the team that a GP is assigned. And within every organization, there are more skilled teams and less skilled teams. And so what will happen is um, a GP will get assigned a good team initially, and then there'll be high turnover. So those fund accountants will leave, go to another firm, and then they'll be reassigned new members, and they have to go through this onboarding process essentially with new accountants. Sometimes those new team members are fresh out of college, and so they feel like they have to train these accountants. So that's where a lot of the friction with fund administrators comes into place. But um, I would say those are kind of widespread issues in the industry, and those are really the specific issues that Juniper Square is solving for with our unique solution. It really comes down to how much of a partner that fund administration team, um, you know, are they taking a partnerial approach to the relationship, or are they just pencil pushers? A good fund administrator is going to proactively see issues and come to you as the GP with solutions. Whereas a poor fund administrator is going to just react to issues that arise and bring those issues to you, expect you as the GP to solve those issues. A good fund administrator is going to have a highly experienced staff with a broad base of knowledge, and they're going to be able to leverage those skills to see issues before they arise, and they're going to advise you as the GP to make the best decisions before issues become worse, or before they become issues at all.
And you started by saying the inaccurate reporting piece. So as an investor, how can someone sniff something like that out?
If a GP is not outsourcing their fund administration, there's all sorts of ways they can manipulate the books and the numbers, so that you would never know.
Right.
So unfortunately, I don't think there is a good way to address that. Now, I may have misanswered that question. Are you saying from the GP standpoint, how might you sniff out, or how might you prevent or spot a poor fund administrator? In that case, a lot of our customers will run shadow books. So they'll have a third-party fund administrator do the fund accounting, and then internally they'll have their own redundancies where they're running shadow books. And that's a way of ensuring that your fund administrator is good and is producing accurate reports.
And in terms of Juniper Square specifically, what do clients praise you for, and what do clients wish they saw more from you?
Most of our clients wish that there was more customization from the software. Um, and so just to pause there for a moment, um, what makes Juniper Square so unique is that we are, in addition to a third-party fund administrator, a software company. We have the DNA of a Silicon Valley tech company. And what that means is we have access and we have built a team of over 150 software engineers. And we've built this best-in-class investment management, investor portal software platform over the past 10 years. And we have over 2,000 customers that use that platform. And software, creating software, building software is very complex. And there's always this balance between customization and reliability. Having less customization is typically a good thing. But I would say for Juniper Square, that's where I hear most from our customers about where they wish they saw more.
Right. And speaking of the
Yeah.
software, we have a lot of technology and we're in a digital age, which means security is of ever increasing importance. So how does Juniper protect investor information?
This is I think a very critical question that every investor should be asking for any investment they're considering. So, I would say first and foremost, as an investor, you're going to be wanting to look at how information is disseminated, particularly sensitive information, sensitive financial contact information. For example, a K1 or banking details. Traditional email is really not that secure. So if you're looking at a GP and they're sending out K1s via email, or you're sending them banking details, email, in my mind, that is not ideal. It's definitely not best practice from a technology standpoint. What you really want to look for from a technology standpoint is SOC 2, SOC 2 certification for whatever technology is being utilized for sharing and distributing sensitive information. That's going to ensure that all of the best practice security protocols and redundancies are in place to keep your information secure. SOC 2 compliance is really the gold standard for technology from a security standpoint. So if the technology you're utilizing has that designation, you can feel confident that your information is secure, at least the best of your ability. What I'll say practically is what we look at Juniper Square is sharing sensitive information not via email, but via a secure portal. So we use an investor portal at Juniper Square. All documents are shared within the Juniper Square platform. So they're generated in the Juniper Square platform on the back end by our fund administration team. They're sent out into the Juniper Square investor portal, and then they're accessed through the Juniper Square investor portal. So we have encryptions and firewalls, all of the SOC 2 requirements in place for the software, and then those documents and that information is accessed through the investor portal, which is protected by a username and password, but then additionally has a two-factor authentication layered in on top of that, which, I think will get, that'll take care of about 99% of the issues that most folks will run into from a risk standpoint.
I certainly have not heard of SOC 2, and I'm sure that there's going to be new technology. It just seems like it continues to evolve, which brings me to another question. How do you see AI or technology changing this landscape and transforming these processes?
Yeah, I mean, I think it's undeniable AI is going to play a very important role in our world and in the commercial real estate private equity sector. Um, from Juniper Square's standpoint, the way we're looking at it is it's going to allow our teams across various departments, so investor services, fund accountants, to focus on high value tasks such as irregularities and consistency. So it'll help. It'll help. Essentially teams work more efficiently, um, and it will help. It'll help identify errors more readily and more accurately. I don't see a world where the human component is eliminated by any means, but it will definitely allow better economies of scale, and it will allow teams, I think, to have better work-life balance, um, uh, to be able to focus on higher value activities. I think from an investor relations standpoint, there's significant potential with AI. Being able to leverage large language models and artificial intelligence to really enhance the investor relations experience and investor communications. And so we have already started working on features and products within our technology that can leverage AI to help our customers, the GPs, communicate more efficiently with investors.
Yeah, and with technology, like right now, for example, they're talking about regulating AI. So, in terms of the fund administration side of things, are there any regulatory landscapes there, or how do you guys ensure compliance?
Oh yeah, certainly. There are there is a regulatory landscape within fund accounting. Um, you know, we we our strategy to uh, I think to address that is to hire the most skilled and apt talent in the industry. Um, I think if you look at the tenure of our fund accountants, they're significantly higher on average than most firms. And the reason we're able to do that is because of our technology. We don't have to hire as many fund accountants um, because we have technology that automates a lot of the manual um, and time-consuming, redundant tasks, and so we can pay our people more and hire better talent. This is an interesting statistic. So just last year we had over 14,000 fund accountants apply to Juniper Square.
Oh my gosh.
I um, our team growth is just absolutely staggering from a fund accounting perspective. But we're talking a fraction of a percent or accepted. And the reason behind that is because the commercial real estate and private equity fund accounting world has been largely stagnant for the past 30 years. Third-party fund administrators essentially have gotten comfortable with producing financial statements, um, on a consistent and low cost basis, really not adding value anywhere else in the organization. And that's where Juniper Square has really tried to rewrite the playbook of what a fund administrator is, value that they offer. Um, and so, um, all that being said, we hire really good people, with a tremendous amount of industry experience. And so we use that pooled experience to make sure that we're constantly keeping up with regulatory risk.
It certainly does provide another level of comfort to know, okay, a sponsor who is using a Juniper Square or third-party fund administrator is already having that alignment of interests there by separating those two products. And then on top of that, there is some regulatory component to that side of the fund accounting and things too.
Absolutely. I think compliance is really near and dear to my heart. You know, um, a note on that. Um, I definitely, I think it would be helpful to kind of walk through like how you ensure compliance. And as an investor, when you're doing your due diligence with an LP, how some things you can do to make sure that the GP, um, be in compliance.
Yeah, sure. That would be great.
Um, so, I would say the first thing is, GPs, they got to go find a fund formation attorney when they're launching a fund. And that's going to help with the legal doc formation. Now, the investor onboarding process, I think, is important. And I think best in class GPs will do some sort of background checks on LPs. Some GPs are requiring proof of accredited investor, depending on the type of fund. Um, but there's also KYC and AML, and this is often misunderstood by many of the clients I work with. KYC is, at least in the US, I think best practice, and that's going to screen investors, um, against lists like OFAC and sanctions lists. It's aimed at mitigating risk related to money laundering, terrorist financing, uh, and just other illicit financial activities. So certainly, at a minimum, GPs should be screening their investors. I think that's best practice across the board. As we've mentioned, having a third-party fund administrator in place, is going to ensure that the GP is adhering to the fund legal documents. And then we've got the independent third party who's calculating returns, promotes, and all those important financial items. Now, the last point here is funds really should be audited. Not all types of funds require an audit, but as an investor, you should want to see an audit. And the nice combination of having a third-party fund administrator and an auditor, they can't be the same, is that you have this additional redundancy or additional layer of oversight. So you've got the third-party fund administrator who is doing the accounting and reporting throughout the year, and then that is again being looked at by a third-party auditor, a tax audit firm, CPA firm, and they're reviewing the books and stamping it with their stamp of approval. Um, and that's really best.
Yeah, I know some of our investors can get a little bit annoyed that a KYC takes a few days, and it can delay their investment, but it is important. And the fund audit is something that we also get requests on as well. And I think it's a really savvy question to ask. Thank you. I'm just going to transition to our fire round right quick and start with your favorite restaurant.
Favorite restaurant at the moment, Bluefin,
Oh,
in Dallas. It's a sushi restaurant.
okay. Is it they import sushi daily, something like that? Yeah.
It's so yeah, I'm from, the Bay Area. They have pretty good sushi out there. Being in Dallas, it's been kind of tricky to find good sushi. So
Yeah, I bet.
Bluefin's the winner on that.
Second question, what brought you joy this week?
What brought me joy this week? Um, Father's Day. I'm a proud dad of two kids.
Oh,
Got a 8 and a 6-year-old.
oh my gosh, that must be special. What,
Absolutely.
last question, what is your favorite media to stay up to date on the news?
You know, uh, LinkedIn, I think is probably my preferred choice for staying up to date on the news. LinkedIn, um, you know, uh, I don't really enjoy traditional media outlets. I really kind of prefer to get a more targeted um, vantage point. Uh, and I just find that the true experts and pundits in the commercial real estate, private equity sector are pretty active on LinkedIn and Twitter, I would say. So
Yeah.
that's my preferred method.
Are there like one or two people that you follow on LinkedIn that you think's a really good source to go to?
I would say one of my favorites is Jay Parsons. Um,
Yeah, he's a name that comes
he
up
comes from
often.
RealPage, an economist. Yeah, I think he's been interviewed by Origin. Um, he's an
Yes.
excellent resource. Um, there's, I'm trying to remember one other individual that I pull from very frequently as well. But if I think of it all, I'll shout it out. But
Yeah, no problem.
um, there are numerous, experts on pundits on LinkedIn.
Yeah, LinkedIn is a very a good place to go, no doubt.
Yeah.
Matt, thank you again. Why and how should people reach out to you?
I would say if you're an investor that is looking for uh, a new GP or a different asset class that maybe you haven't invested in before, I've worked with hundreds of different GPs throughout the industry, and would be happy to connect you with my contacts if you're a GP and are interested in um, consulting about best-in-class technology or fund administration or how to scale your business from a technology or services standpoint. Um, I'd be happy to connect. You can reach out to me on LinkedIn. Um, very active there. You can find me Matt Wiegand, Junior Square. I'll pop up, and my contact information is public there.
Perfect. I hope people are more clear around the importance of keeping up to date with their investments so that they can ensure their partners are doing this. Until next time, adios. If you are ever interested in a recap with the main points discussed throughout the podcast episode, check out the Q&A series because we dig deeper into the concepts discussed, and you can follow along on YouTube if that's preferred. If you find any value in the show and want to support it, it would be awesome if you texted someone right now about it. You can say you have a podcast recommendation that you think they should listen to and then ask them to get back to you with their thoughts. Anything helps, and I really rely on the amazing investors like you to spread the word. Thank you so much for listening, and please feel free to reach out at any time.